Hey children, and welcome back to this amazing and interesting chapter of financial planning. In this session, we are going to talk about previous year questions. All the questions we are going to see from 2020 to 2024 of Maharashtra Board. So this is a bit of important chapter. You can expect some 1 markers. You can also expect a 3 mark question. If you see, in the year 2024, 2 questions of 3 marks were asked from this particular chapter. So you can expect a 3 marker, which is a very important part of this chapter. So without any further delay, so let us see the very first question now. It says in the format of GST number, you can say, there are how many alpha numerals total? So what is the pattern? The first pattern is the state code. State code. It contains 2 digits, right? Like for Maharashtra, it is MH. And for Karnataka, it will be different. For Telangana, it will be different, and so on. Since we are dealing with Maharashtra board, let's talk about Maharashtra, that is MH. Then second is 10-digit PAN number. It is 10-digit PAN number, followed by that. So it will be something like this: MH, then some PAN number, BG, so and so, so and so. That is 10 digit. Then you have state code. And the last digit, rather digit, I would say alphabet, is Z. It ends with Z. So here you can fill in 2. So this is 2, this is 10, this is 2, and this is Z. Correct? So this state code is in basically letters, this is in numbers, and that is how the GST number looks like. And the total is always 15. Please make a note of this. The total is 15. So let us see this question now. It says, Pawan Medicals supplies medicines. On some medicines, the rate of GST is 12%. Then what is the rate of CGST and SGST? Simple question, isn't it? So what is the solution to this? We know that the rate of CGST, that is Central Goods and Service Tax, is the same as State Goods and Service Tax. C stands for Central GST, S stands for State GST, and both of them are half of the original GST. That is equal to 6%. So what can we say? We can say that the CGST is 6% and the SGST is also 6%. Easy question. If they give you 10, 5, 5. If they give you 20, 10, 10. Equally split. Okay. Now let us see an activity based question. Very simple, very easy. It says, Shri Shanti Lal has purchased 150 shares of face value. The face value is rupees 100 for the market value of rupees 120. FV stands for face value, MV stands for market value. Company has paid dividend at 7%. So what is the dividend? Dividend is paid 7%. Always remember, dividend is calculated on face value. Please make a note somewhere. Dividend is calculated on face value. Find the rate of return on his investment. You're supposed to find out the rate of return. Okay. So here he purchased 150 shares. This was asked for 3 marks, by the way. 150 shares of face value rupees 100 for market value. So what is the market value? Firstly, let us talk about market value. So market value of one share is how much? Is rupees 120. Number of shares. How many shares did Shri Shantilal purchase? Number of shares purchased is 150. So what is the investment? Total investment is equal to 150 multiplied by 120. So can I say 15 12s is 180, and then 0, 0. So 18,000 rupees is the total investment done by Shri Shanti Lal, right? Okay. Now how much is the dividend? The dividend is 7%. What is the face value? The face value is rupees 100. So face value is rupees 100. So dividend per share. So dividend per share will be how much? 7% of 100 rupees, right? 7% of 100. So that is 7 by 100 into 100, that is equal to rupees 7. So for 150 shares, so dividend will be how much? The total dividend will be equal to 150 multiplied by 7. I hope this is clear to all of you, because he has purchased 150 shares and the dividend is calculated on the face value, not on the market value. So 15 sevens are how much? 15 6 are 90, 15 sevens are 105. That is 1050. So if you see, the dividend is 1050. What is the investment? The investment is 18,000. Now can we calculate the rate of returns? Okay, this is an activity based question. So let us see. Anyway, everything is given here. We just have to fill the boxes. Face value is given, number of shares is given, market value is given. So sum invested will be how much? Market value multiplied by number of shares. We have already solved that. Just a quick glance of it. Market value is how much? 120. Number of shares is how much? 150. Correct? That is 18,000. We calculated 18,000 here, right? So dividend per share is face value multiplied by rate of dividend. So dividend per share, that is face value. Face value is how much? 100 multiplied by rate of dividend. Rate of dividend is how much? 7%. You can also write down 7 by 100 there. So dividend per share is 7 rupees if you remember. So what is the total dividend? The total dividend received is 150 multiplied by 7, right? So as I said, 15 5s are 75, 15 6s are 90, 15 7s are 105. That is 1050. And rate of return is dividend income by sum invested. So see, this is 1050 and this is 18,000, isn't it? That is 18,000. It is not 1800, because if you see 18,000, solve it. 1 2 1 2 1 1. So finally you get 105 divided by 18. Again, if I divide this by 3, 3 6 are 18, 3 3s are 9, 3 5s are right, 35, 3s are 105. So you divide 35 by 6. 6 5s are 30, right? So this becomes 5, this is a dot, 0, 6 8s are 48, then 2 0, 6 3s are 18, then 2 0. So basically 5.83. 5.83% is the approximate rate of return. I hope this question is clear to all of you. Easy question, right? Let's continue further. Okay. One marker again. On certain article, if rate of CGST is 9%, what is the rate of SGST? Always remember, this we have already done. Central Goods and Service Tax is the same as State Goods and Service Tax, right? So if CGST is 9%, SGST is also equal to 9%. What is GST? GST is the addition of both. So GST will be obviously equal to 18% for this particular example. It is not asked, I am just telling you. Okay, let's move on to a new question now. So complete the following table using the given information. Now here you are supposed to understand three things. The relation between face value and market value. Relation between face value and market value. When the price of the share is at par, that means the face value and the market value is equal. When the price is trading at a premium means it is slightly costlier than the face value. That means the market value is greater than the face value. And whenever the price of the share is at discount, that means the market value is less than the face value. Simple. Premium is more. Discount you already know. Discount means reduced, right? The same discount that we use when we go for shopping. We try to reduce the price, right? That is the discount. So discount is minus, it gets reduced. Premium is plus, it is costly. And at par means it is equal. Okay, so I don't think there is anything much in this. Directly we can do face value is 100, the price of the share is at par. So if you try to purchase this, you're going to get the same share for rupees 100, correct? Now the market value is 575 and share is at the premium of rupees 500. That means the face value is less because it is at premium. So that is 575 minus 500, right? So that is 75. Okay. So the face value is 10, market value is 5. Market value is reduced. So can I say here there is a discount? This is a discount. Discount of how much? Can I say it is a discount of 5 rupees? Discount rupees 5. And this is 200. This is discounted now at 50 rupees. So what will be the price of the share? Here the price of the share is going to be 200 minus 50, that is rupees 150. I hope this is clear, easy. Orally you can do this. Okay, let's continue. The next question says, courier service agent charged total 590 to courier a parcel from Nashik to Nagpur. In the tax invoice value is 500, on which GST is 45 and SGST is 45. Find the rate of GST charged for this service. Now, interesting question. Actually, it is very easy because if you see, CGST and SGST, both of them are given. CGST is how much? 45 rupees. SGST is how much? Again 45 rupees. So what will be GST? GST is the addition of CGST plus SGST. So that is equal to 45 plus 45 and that will be equal to 90 rupees. Correct? Now the question says, the courier service agent charged total 590 to courier a parcel from Nashik to Nagpur. In the tax invoice is 500 rupees, on which CGST, SGST is given. We are supposed to find out the rate of GST. So can I say rate of GST is equal to the actual GST charged by, what is the value of the good? The value of the good is 500 multiplied by 100. So that gives you 90 by 500 multiplied by 100. So two zeros get cancelled. 90 divided by 5 is 18. So the GST charged is 18%. Correct? I hope this is clear how we are getting 18%. Don't write down 590 here. This 90 rupees is inclusive of GST. So if you take the original value is 500. So children generally make a mistake in that. The questions are pretty simple, straightforward, but don't take 590, take 500. Easy? Okay. So here we are supposed to fill the boxes that are given, and this was asked for 3 marks. Now if you see, there are some food items. See horizontally. Let's focus horizontally one by one. So the first food item is coffee. The quantity is 1. Rate is 20 rupees. So obviously the taxable amount is going to be 20 rupees. CGST is 2.5%. So 2.5% of 20 rupees is rupees 0.5, and SGST is also 2.5%, which we already know because SGST and CGST is equal. So can you tell me what will be the SGST charged on coffee? SGST we know is equal to CGST. So can I say SGST is going to be 0.50 rupees. So if I see the first box, this is going to be 0.50. Same thing, no? CGST, SGST. Now we have masala tea. One masala tea, 10 rupees. Taxable amount is 10 rupees. Again, if you see, 0.25 is given and 2.5%. So obviously if SGST is 2.5%, can I say CGST is also 2.5%? You have to use some logic here. No need to even solve. And then if the CGST is 0.25 rupees, how many rupees will be here? 0.25. Always remember this two columns are always equal. They're going to be split equally because CGST and SGST are always equal. That's it. Next is masala dosa. Okay. Now understand. Two quantities of masala dosa. Now understand first. So two quantities of masala dosa were taken. The price of one is 60 rupees. So what will be the taxable amount? Can I say the taxable amount will be 2 into 60? Obviously, if you take two masala dosas, that is going to cost you 120 rupees. Now see again, 2.5% is the CGST, SGST, both that will be equal. This is 3 rupees. So obviously, what will be the CGST charged? CGST is also going to be 3 rupees. Now if you want to check, you can check. That is 2.5%. 2.5% of 120 rupees, which is the cost of two masala dosas. That is 2.5 of 100 multiplied by 120. It's not needed because anyways we can do this. And then 12 multiplied by 2.5 is how much? 30 divided by 10. Anyways you're going to get 3 rupees. So don't keep on wasting your time by solving these two columns. They are always same. Okay. Now finally, if you see, the total is given 150 and CGST box is empty here. So obviously this is the total, which is 3.75 rupees. So if 3.75 rupees, that is 3 rupees 75 paise, is the SGST, then can I say 3 rupees 75 paise is also your CGST, equally split. They can also ask you the total GST. So if I take the total GST is going to be 7 rupees 50 paise, because 3.75 plus 3.75, that is 7.5, 7 rupees 50 paise, and that is why the purchase is of 150 rupees, but 7 rupees 50 paise GST is added, and that is why it is 157.50. Correct? Easy? Okay. Let's continue further. Let's have a look at a new question. It says, if the face value of a share is rupees 100 and market value is 150, if the rate of brokerage is 2%, find brokerage paid on one share. See, brokerage is always paid on the market value. Brokerage is paid on the market value. So if the face value of a share is 100 rupees and the market value, how much is the market value? The market value is rupees 150. So brokerage is 2% of market value that is 2 by 100 into 150, 0 gets cancelled, 15 to the 30, then you get 30 divided by 10, 30 divided by 10 is 3. So you can say the market value is rupees, the brokerage is rupees 3. The brokerage is rupees 3 per share. Easy. One mistake that children do is dividend is calculated on the face value, brokerage is calculated on the market value. Please make a note of this. Perfect. Let's continue. Now the next question says, this is an activity based question. The total value with GST, that is including GST, of remote control toy car is rupees 2360. So please understand, this is including GST. The rate of GST is 18% on toys. Complete the following activity and find the taxable value of the toy car. Okay. So firstly, the total value is how much? 2360. What is the rate of GST? Rate of GST is 18%. So can I say the actual value plus rate of GST is equal to the total value? So taxable value is how much we don't know. See, when they say taxable value, that means the actual price of the toy. Don't get confused, taxable. Whatever the price of the toy is, whatever the price of the goods is, whatever the price of the item is, article is, that itself is the taxable value. So can I say here, GST will be 18% of X. So total value, now understand, that is taxable value for toy car plus GST, of course. This is just the formula. Taxable value, that is original price of the, you can say original price of the toy car plus GST. So can I say this becomes, this is already X, the taxable value, and this is 18% of X, correct? Because 18% is the GST. See, this is X and this is 18% of X. So you solve this now. How do we solve this? Denominator becomes 100. 100 into X is 100X. 100X plus 18 is 118X by 100. So 100 goes that side. This is 118, that means this box is correct. You can check the next boxes for your previous ones. And then this becomes 2360 into 100 divided by 118. Just solve it. Okay, they have already given the answer. So basically what they're trying to say is this is 1 and this is 200. If you cancel it, so 200 into 100 is, this is 20, not 200, 20, 20, 20. 20 into 100 is 2000. So yeah, 2000 is the actual price. You can check. 2000 is the actual price of the toy and find out 18% of 2000. That is 18 by 100 into 2000, 0, 0, 0, 0. 18 2s are 36. This is a 0. So 360. If you add 360 to 2000, you get 2360 and that gives you this. That means our answer is correct. Right? Perfect. So that's how we have solved it. Let's see one more question. It says, okay, so the new question says, if 50 shares of face value 10 were purchased for market value of rupees 25, company declared 30% dividend on the shares, then find three values, sum invested. Let's focus on the first part. Firstly, what is the market value? Market value is rupees 25 per share, right? How many shares were purchased? Shares purchased so can I say market value is 25, share purchased are 50. So the investment total investment is equal to 50 multiplied by 25. So 25 fives are 125 and then a 0. So can I say the total investment is rupees 1250. So 1250 rupees is invested in the market for this particular share. So first part is done. Now let us talk about the dividend. Dividend is always calculated on the face value. I've told you many times, dividend is calculated on the face value. Face value is how much? Firstly, you check what is the face value. Face value is rupees 10. Number of shares are 50. Shares 50. Let's talk about dividend. Let's talk about dividend per share. That is 30%. So can I say 30% of 10? That is 30 by 100 into 10. Correct? Okay, that is 3 rupees. Rupees 3 is the dividend received per share. But how many shares are there? Total there are 50 shares. So total dividend, I hope you are getting this. Total dividend is equal to 50 into 3, that is equal to 150 rupees, right? So 150 rupees is the dividend. So we have got the dividend, we have got the investment. So how do we find out the rate of return? The rate of return is equal to the dividend earned by the investment made multiplied by 100. Correct? So this 0 gets cancelled. You get 1500 divided by 125. Divide by 5. Correct? 5 divided by 125 divided by 5 is 25. You can divide by 5. That gives you 3. 0, 0. You can divide by 5. That gives you 5. You can divide by 5. That gives you 60. 5 ones are 5 12s are. So 12% is nothing but the rate of return. So we got all the three values. The rate of return is 12%. The invested amount is 1250 and the dividend received is 150 rupees. So I hope you have understood this question and I hope you enjoyed the session alongside me. In the next session again we'll meet with a new chapter. Thank you so much everyone. Until then, learn with top scholars.